And you can see there, that is a one-year chart of the Dow Jones Industrial Average. A lot of downs, a lot of ups, a lot of ins and outs, what have you. What is Dow theory telling us right now? And look, this is why they call it a theory, right? Because you have the data. Some people say it's pointing to bear signs. Some people maybe not so much. Mark Hulbert is here to sort of sift through all this and tell us what is the reality. Mr. Hulbert, how are you? Hey, before we get to the Dow theory, I got to give you some credit on your Facebook call. Things seems to be getting more right by the minute.
Well, it's just the numbers. Don't give me any credit.
Okay, let's talk about Dow theory. This is a very, very old idea about the market, but it tends to be pretty on target. What's it telling us right now?
Well, again, as you said in your intro, it depends on who you talk to. But basically, the news isn't good. The question really, according to at least the Dow theorists that we monitor here at the Hulbert Financial Digest, it depends on how bad it is. There are degrees of relative badness, if I can put it that way. One of the Dow theorists, in fact, one of the more prominent ones, a fellow named Richard Russell, who's been putting out a service called Dow Theory Letters for over 50 years, if you can believe it. He said that a Dow theory bear signal was triggered a couple weeks ago when the Dow and the transports broke below their April lows. And he says, watch out below. In fact, is now calling it a continuation of the bear market that began in 2007. And we're now looking to see leg number 2 of that. So that's pretty bad news.
Sounds
but before
ugly.
Yeah, it does sound ugly. Before you rush out to sell everything, know that the two other Dow theorists that we track say that it's premature to say there's a sell signal, though of course it bears watching. But they remind us that under the Dow theory that the previous signal stays in effect until it's formally reversed. Because there are a lot of these false calls and whipsaws that otherwise the Dow theory misses. And they both remind us that the last Dow theory buy signal, according to their interpretation, was a buy, and therefore we remain on a buy signal. I think everyone would agree that if the May lows were taken out, and if we see more days like today, it won't be long before we see that, then that would be a very bad sign.
How is it possible that, like we said, this has been around for a very long time. Why is there such disagreement about what the numbers mean? I mean, these are just numbers, right? I mean, it should be a pretty simple, straightforward thing.
Well, it's a great question. It turns out the Dow theory was created by a guy named William Peter Hamilton. He was the editor of the Wall Street Journal back in between 1900 and about the late 20s when he passed away. And he never codified his theory into a set of very precise and unambiguous rules. In fact, what he would do is he would write his editorials in the journal looking at various chart patterns, and people have tried to look at all his writings and the chart patterns that he was looking at and try to glean what it is that he was trying to do. And that's why we can have all this endless interpretation. I should say that there have been academics who've tried to look at it. They have codified it into very precise rules, and they were able to confirm that over the last 100 years at least, on balance, it's done better than a buy and hold. So there is something worth paying attention to.
That's very interesting, because my next question was going to be, you're talking about something that was created over a century ago. I mean, the markets were so different back then. How much validity should we still put in this idea about the Dow transports and the industrials? We're talking about 50 stocks altogether.
Well, of course, those 50 stocks between those two indices really dominate the market. I think the combined market value of the 30 stocks in the Dow Industrials is a quarter to a third of the overall market value. So they're not just any 30 companies, of course. The Dow Transports, a lot of people tend to dismiss it as being 20 stocks. Back when William Hamilton wrote about it, it was the railroads, and of course they were a much bigger linchpin in the economy. However, there is some academic work suggesting that the transportation sector is a good leading indicator, that if indeed companies are starting to pull back, you'd first see it in freight and transportation generally. So that does at least give some rationale for saying why we ought to pay attention to that index.